Hello everyone and welcome to episode number 3 of the Money Management System course, a practical approach to design an effective money management system for active traders. My name is Mr. Crypto Tracker, and in this episode, I'm going to teach you how to calculate your trade size. In the previous 2 episodes, we talked about the risk of ruin and the important variables that affect your risk of ruin. Also, we talked about the importance of the optimum percentage of capital to be risked in each trade and how to calculate the optimum value. There are 3 important variables to control your risk. First one is your entry. The second one is your exit. By exit, we mean the initial stop loss. And the last one is your trade size or your position size. The first 2 variables, entry and exit, can be defined based on your trading strategy. Please note that in this course, we assume you have already developed a trading plan which gives you your entry and exit signal. So let's talk about the third piece of the pie, the trade size. As we discussed before, the main element is the percentage of the capital you're willing to risk or you're allowed to risk in each trade based on your win ratio and payoff ratio. Let's say you want to risk only 2% in each trade. So let's see how we can calculate the dollar amount of these 2%. Here is the formula. You can easily multiply your account size by the percent you are willing to risk. In this case, it's 2%. For example, if your account size is $25,000, you can multiply it by 0.02, which is equal to 2%, and your risk amount is $500. Now you can calculate your trade size using this formula. This is the trade size formula. Risk, the amount of risk, the dollar amount in this case is $500, minus commission, divided by entry minus your exit or your initial stop loss. Also, please note that most of brokers eliminated the commissions and they are working only based on the spread. But still, in cryptocurrency exchanges, we still have the commission. So let's take a look at this example and let's calculate our trade size. Our dollar risk amount is $500, and let's say our commission is $80 divided by our entry is $21.50 minus $20, which is our initial stop loss. And we are allowed to trade only 280 shares or contracts. And if our initial stop loss get hit, we only use $500. Please note, when you calculate your trade size for the futures market, your leverage doesn't matter. The only important point is to consider is your stop loss should be lower than or higher than your liquidation level in shorting or longing. We will talk about these points on the chart. Let's take a look at another example. This is our trade setup and we are going to long it. Here is our entry and here is our initial stop loss. We are going to trade to risk only $500. In this case, our commission is $7. Here is our entry, $290.30 minus our initial stop loss is $211.60, and the result is 64 shares. You can use different tools to easily calculate your trade size. I developed a spreadsheet to calculate trade size, which I will share it with you and you can download the files and easily use it. For example, in this case, our capital in this example, our capital was $25,000 and we just wanted to risk 2%, which is equal to $500. Here I enter the entry, and here is our initial stop loss. And you can see we are allowed to trade only 64.9 shares. This difference, like less than 1 share, is because I don't include the commission in my trade size spreadsheet. So here I want to introduce you a very handy website where you can easily calculate your trade size if you're trading cryptocurrencies. If you click on this link, you will direct it to the website. Here is the website. You can search whatever cryptocurrencies you want to trade. In this case, we just want to check Bitcoin. And let's say I'm going to short Bitcoin here. Let me put my short setup here. Here is my short setup, and I will put my initial stop loss just above this last wick, and here is my target. So we will enter our capital here. Let's say our capital is $25,000, and we are going to risk only 2%. And in this case, we are going to short the market. So I used 10x leverage, and I will show you why leverage doesn't matter and only your trade size is the most important parameter. So in this case, our entry would be $20,214, and our initial stop loss is $20,548. And let's say our exit is $19,164. So here you can see here is your liquidation level, and your stop loss is lower than your liquidation level. This is important. And if you change, for example, your leverage to 20x, still your risk, the capital you're risking is $500. It means if your initial stop loss hit, you will only use $500. And it was the same for the case of 10x leverage. See, this is the 10x leverage. And the only point you should consider is you should choose your leverage and consider your stop loss should be lower than your liquidation level in shorting, and your stop loss must be higher than your liquidation level in the case of longing. So let's come back to this area and check this information. So with this information, it calculated your risk amount, which is $500, the margin you need to enter to this trade, position size, you are allowed to trade almost 1.5 Bitcoins here. The liquidation level is at $21,000, and you can visually see it on the chart. Your risk to reward ratio is more than 3. Estimated P&L is $1,571. And you can see many good information here. So personally, I prefer to use my spreadsheet, but this website is awesome too. And also for Forex market, the trade size formula is almost the same, but with a minor difference. Here is the formula for the Forex. You should enter your risk amount here. And I eliminated the commission because in most Forex brokers, they don't charge commission. They only work based on the spread. Divided by stop loss in pip, multiplied by the value, the dollar value per pip. For example, if you are going to risk $200 and your initial stop loss is 50 pips, and we know the dollar value for 1 pip in one standard lot is $10. So $200 divided by 50 times 10, and you are allowed to trade 0.4 lots or 4 mini lots. If you Google it, you can find many different websites which can provide you tools for calculating your trade size, but I personally use myfxbook.com website to calculate my trade size, and I will show you this website here. In this part, you can select which pair you're going to trade. In this case, let's go Euro USD. It will ask you about the account currency. My account currency is USD, but if your account currency is different, you can choose from this list. Then you can enter your account size. Let's say my account size is $25,000 and I'm going to risk 2%. And also if you click on swap with money, you can enter the dollar amounts. Let's say I'm going to risk only $200 in this case, and my stop loss is 50 pips. If you click calculate, it will show you are allowed to trade only 0.4 lots or 4 mini lots. So this is the end of this episode. You can now calculate your risk amount and your trade size. And in the next episode, which is the last episode, I will teach you how to develop a trading journal and record all your trades and your profit and loss. Also, I will talk about vital trading statistics and how you can use these statistics. So see you on the next episode.